Hi, let's talk about Interlink Electronics. It's a company together with its subsidiaries designs, develops, manufactures, and sells force sensing technologies that incorporate proprietary materials technologies and firmware and software into standard sensor based products and custom sensor system solutions. So the company is not so big, but it's very has the good health and good potential. They became profitable this year, but there's also risks such as volatile share price. Earnings have declined by 61% per year of the past 5 years and does not have meaningful market cap, which is currently 69 million. And the latest news made the stock pretty volatile, and it bounced from the $17 to 10, so it's minus 40%. There was some of the CFO change expansions. The anyway, the market performance shows that 1 year return were at 87%. Of course, these numbers beating the industry, beating the market. Long-term price volatility considered as highest. 3 year return 139, and longer term 5 year return it's actually negative minus 3%, but based on the valuation currently 783, so huge P ratio currently, but unfortunately we don't have any price targets on tip ranks, but we do have on the market watch, which shows currently $16. So there's actually a good potential. So if we, for example, this price is $10 per share, so I think there could be the some around 50%, maybe 60% upside based on market watch. And of course, this is not financial advice. Every investor should research the company with risk-taking abilities and not invest in more than 1% from the portfolio. Future growth is forecasted $18 per percent at the tech industry, but fortunately we don't have for the company any forecasting. Past performance, so actually it's decreasing. The dynamic is not looking so good, and also the EPS were negative at the last year. And financial health side, we see here that the good news is that they did not had a depth within 5 years, and it's currently even debt free. Actually, they did a little bit 186k. Yeah, they do have a lot of cash and equity, so based on balance sheet, it's looked pretty green, pretty nice. They're not paying dividends, and also there was no insider transactions volumes. Ownership breakdown shows that public companies holding this mostly 67%, general public holding only 15%, hedge funds almost the same 15%, insiders 1.4, institutions 0.43. Top shareholders, we don't see here a lot of companies, but anyway, and actually this is last reporting holding date last month actually. Oh, there's a Toro Research Capital that 2 months ago, but there was not so much changes within the top shareholders. And simple safe dividend shows that shares outstanding decreasing, but also the total sales are decreasing as well. And if we look at this screen, so 1 year frame, everything we can find over 100% return. 5 year frame, not looking so good, based on the fundamentals where the earnings are declining, so in price also. So those who invested, for example, back in 17, they are like within few years they're minus 70%. But those who entered, of course, in late 2019, they are pretty much holding, yeah, I think over 500%. So I don't see any reason why this could not drop to these same levels, but there could be possibly good buying opportunities coming. So even this level, I don't think this is actually good, but anyway, it's, and those who are entered here, for example, 2 months ago at, yeah, $15 per share, minus 30. So be careful, guys. Don't load up over 1% of your portfolio, and make sure your risk-taking abilities allows you these volatilities. So if you invest, for example, 1,000, can you accept that there could be possibly 200 after a few years, and you keep holding it? So it's a very difficult situation for every investor, and it's possibly better to buy a low-cost fund. And yeah, investing.com is only the stock for long-term investors as a strong buy. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.